The recovery, though, here remains uneven and incomplete. The burden is still falling on lower income workers. The unemployment rate in the bottom quartile is still 20%. There's still 8.5 million people out of work. And this unevenness that we're talking about is a very serious issue. Viruses are no respecters of borders, and until the world really is vaccinated, we're all going to be at risk of new mutations, and we won't be able to really resume activity with confidence all around the world. So it's not only the right thing to do, it's also the smart thing to do, as the Director General just said. The real concern, though, is that longer-term unemployment can allow people's skills to atrophy, their connections to the labor market to dwindle, and they have a hard time getting back to work. Also, it's important to remember we're not going back to the same economy. This will be a different economy. And one of the things we hear from companies is that they've spent a lot of time since the pandemic arrived looking at ways to have more effective technology and perhaps fewer people. So you're going to see some of that in these public-facing jobs. So there will be millions of people who have a hard time finding their way back into the workforce and recovering the lives that they had just a year ago. And, I think it would be appropriate for us to continue to support those people. What we call labor market scarring, when people are out of work for a long period of time, the record shows empirically that their whole economic lives and, frankly, their broader lives as human beings can be damaged even permanently. So we want to avoid that. And I would say we have avoided a great deal of it. The really bad outcomes that we were concerned about a year ago have not materialized. Nonetheless, 9 or 10 million people out of work, and we need to keep supporting them and supporting the economy, and we will. There's a difference between essentially a one-time increase in prices and persistent inflation. And when we say inflation, that's what we mean. We mean persistent inflation that goes up by 2% or 4% or whatever it is, year after year after year. And that level of inflation tends to be dictated by underlying inflation dynamics in the economy, as opposed to things like bottlenecks. So, the nature of a bottleneck is that it will be resolved, that the supply side, if you will adapt, and that therefore whatever costs people have to bear in prices because supplies are temporarily tight as the economy reopens, those won't be repeated next year. We wouldn't think they'd be repeated. We'd think that the supply chain will adapt and become more efficient. It might take a year, but that'll happen. And so that's essentially what we're saying. Remember, Sarah, that we've had 25 years of inflation dynamics, roughly 25 years, where inflation has been low. Many advanced economies around the world, at least for the last decade, have been unable to reach 2% inflation. Some are actually fighting off disinflation. And that has been the dominant sort of set of dynamics about inflation for some decades. And now we have a situation where the economy is reopening. There'll be a surge in demand, perhaps. There will be bottlenecks, perhaps, but it seems unlikely that will change the underlying inflation psychology that has taken deep roots over the course of many, many years. So that's what we think. We think that there will be upward pressure on prices, which may be passed along to consumers in the form of price increases. We think that effect will be temporary. Now, let me say that there's no certainty in this, and if it turned out that inflation, and particularly inflation expectations, were to move up materially in a way that suggested that they were being de-anchored and that inflation might move persistently well above 2%, we would react. Of course, that would be our job. One of our two mandates is price stability. The other is maximum employment. We don't think that's the most likely outcome, but we do have the tools to deal with that outcome. We will use them to guide inflation back to 2%. If the need arises, but in the most likely case, this period will show temporarily higher prices, but not persistent inflation.